Hi, everyone. So, welcome to our episode one, where we talk about property investment and finance. My name is Harj, and I am from Ray White CSI Property Management Team. I look after the business growth and operations, which means I work very closely with landlords and investors to protect their assets. And I'm joined here by Peter Singh from Money Plant, who specializes in structuring loans, investment, and finance. So I'm passing it to Peter.
Thank you, Harj. Yes, my name is Peter Singh, the principal mortgage advisor from Money Plant. I have been in this industry for over 15 years now, being an ex-banker for 8 years, and I've been doing this for 8 years now. So, Harj, thank you for coming in today. It's our first discussion,
Yeah.
and I'm really excited because it's always me and Kyle usually. So it's the first time that I'm doing it with somebody else.
Yeah, really excited for it too.
It's good for us and good for our clients as well because I see a lot of misconceptions about rental. What's the rental market is doing? Because we have no idea. I can tell you everything about finance even while I'm asleep. But if you ask me anything about rental market, I do not know. So from a rental market perspective, because you are into it every day, and I see that you're super active right now. So what's really happening right now? Because our clients, including myself, we only have assumptions. Right, the market is slow or market is high. Rental market is there are too many properties. But what's really happening behind the scenes?
Yeah, thanks, Peter, for the opportunity to share it. I think it will be a really good insight for our clients. So, rental market, it's been a very interesting year for us. We have seen more than 7,000 properties listed in Auckland year on year. So, the supply is really, really high. Which is actually resulting into softening of the rents as well because it's giving tenants a lot of option to choose from.
Correct.
So the rents are high versus the rents are going bit softening a bit because of the surplus supply in the market. And what we are seeing in the market is that property presentation is important than ever. We are in the market where tenants have a lot of option to choose from. So it is very important these days how our owners present their properties in the market. Because gone are the days where you can, click those photos with your phone and post it online.
Yeah.
Because your property creates a first impression now. So if it's not helping tenants stop and book a viewing, then it's defeating the purpose.
Yeah.
So that's why where the things have been really changing in the rental market, where we have to keep update with the trends and everything as well. Are you seeing the similar trend from the finance perspective as well?
Yes, so there's a lot of changes, Harj, and particularly in the last 6 months, a lot of changes. The rates have been going up. But I'm going back to what you said. You're absolutely right. Even I see that some people are selling their properties themselves on private sale, and then they just take photos themselves and put it on the market. As a buyer, if I'm the buyer, I would just look at the photos. Even the property might be, well presented at when I see that physically.
Yeah.
But if photos are not well presented, that's going to put me off as a buyer straight away. So same for rental. If the property is not presented well in photos, I'm just going to skip.
Yeah,
It is very, very important, especially when the market is extremely, there's a lot of competition out there.
Definitely.
Now, coming back to our market, the
Yeah.
interest rates, they have been unfortunately going up. People often, I always say this, don't look at OCR only. OCR does not really reflect on fixed term rates. It only reflects majority of the time on only the floating rate or your term deposit rates. Look at the OCR. OCR has gone up only last time, a couple of weeks back, but the interest rates, they have been going up since December last year. Right. So
Yeah.
rates been going up. What's the reason? Why do they go up? If the OCR has been the same, interest rates are driven by the funding, which is over the wholesale funding, which comes from the overseas, especially like America or England or Singapore, Hong Kong. That funding cost to the bank has been going up. right? And this is why the rates have been going up. And unfortunately, the rates have climbed up again in the last couple of weeks. So you probably would see in the next week or so, the interest rates are going to go up.
Just on that, I have another question, Peter, for you. Because yes, as I gave the market snapshot from the rental perspective, we also see our investors and landlords under a lot of pressure as well because of the current market.
Yeah.
Going back to the council rates. So the council rates have gone up more than 7.5%. And from a rental perspective, it means close to half a week's rent, right?
Yeah.
So with all the cost of having a property going up, we do see sometimes a bit of a panic reaction on sustaining those portfolios, whether it's worth keeping those portfolios in today's market.
Yeah.
So what's your opinion on that?
So see, Harj, 99% clients that I see, their focus is only interest or cashback. Nobody, like I mean nobody asks us, okay, how do I structure my loan? How do I better my cash flow? Or how do I pay my loan faster? Right? So it is not about the interest rate, or it's not about the cashback. That's a cherry on the top. That is gonna cashback, and the interest rate, the whatever the interest rate is available in the market is gonna come along automatically. But it is about the structure. If you really want to work on your cash flow, when as an investor, if you're putting money from your pocket, every week, couple of $100s or more, that's when these investors, they feel the pressure, and that's when they probably come back to you guys, or they look at explore the options to sell the property. But they really should sit down and explore their structure. What sort of structure are they on? What's their goal? Are they going to keep this property for the next 2 years, 5 years? Is it their rental portfolio for the next 10 years? Then you got to make plans accordingly, right? The majority of the investors, they should have their properties on interest only. But I still come along. The clients, they're still paying principal and interest. But those are the clients who are dealing with the bank directly. They have no advisors. They have no idea. And once they're onboarded by the bank, then after once they're onboarded, banks unfortunately don't give you advice. And then, as an advisor, we look after their accounts day by day for throughout their life. So they should really go on interest only. They should not be paying any principal towards the property, which is investment only. And also look at the cash flow or the structure. You have different portions. You don't have your mortgage as one off. If you got $1 million mortgage, you just fix $1 million for a year, or year and a half, or 3 years. You portion it depending on your goals. And often people just look at the lowest rate and just fix it for 6 months or 12 months without knowing the consequences, what's really happening in the market, or what's really likely to happen in the market. Like right now, people are gonna, I have clients day to day, they look at the lowest rate, 469, 459 for a year. They say, oh, that's a great rate. I'm going to go with 1 year. Why? Because the rate is better. But they don't know rates are still expected to rise within the next 6 to 12 months. They should not really, again, it's sitting down with, it's very, very important. Sit down. If anybody who's feeling the heat or feeling the pressure, they should sit down with an advisor and re-look at their structure, where they may not have to even explore options of selling.
Oh, that's a great advice, Peter. I do see a lot of mistakes that our investors making from rental perspective in the current market, which one, as I mentioned earlier, is also not investing in the presentation of a property, and the other one being not aligned with the market. So when the properties are not aligned and overpriced and they sit vacant, not realizing that a property sitting vacant for over 3 weeks is resulting them, a loss of more than 2% of their rental yield, right?
Yeah,
Which then
correct.
turns into a negative cash flow for them as well. So I know you have mentioned about what they should do in the current market, but if you have to pick up 3 things that the investors should avoid, the mistakes they are making, and top 3, if your picks to avoid in the current market, what would that be?
Don't look at the lowest interest rate first, especially, and if you're dealing with the bank directly, have an advisor. Dealing with the bank, even when you have one unoccupied property, still, because they can't give you advice. right? So first, do not look at the lowest interest rate and fix it for 6 months or 12 months. Second, have an advisor, sit down with an advisor and do the whole restructure, especially if you are going through the pressure where you're putting money from your pocket. Third, never pay principal and interest for your investment property unless you have nothing left towards your unoccupied property. Because I see people, they're putting, when you're putting money from your pocket, $200, whatever amount, that's when people are put off by investment properties. If the investment property is servicing itself, yes, every now and then you're putting about, 100, couple of $100, people do not mind.
Yeah.
I've seen that. But when they are regularly putting money towards property, that's when they're like, is it even worth? And considering the last 3 and 5 years where the property market capital gain hasn't been the best, unfortunately, but at the same time, it's not the best time to sell either. Try to hold on to property and just explore your options. Again, I'm keep talking about the structure because structure is very important. Majority of people have no structure. They're just sitting on one loan account and then they have no idea how to do it. So first, the do not just fix for lower rate. The second, the property should be on interest only. Do not pay interest and principal because that is basically suffering, making your cash flow suffer.
Perfect. No, great tips, Peter.
Yeah.
So, everyone watching it, if you have any questions regarding your finance and structuring your loan, you know who to contact. And if you have any questions regarding your rental investment and property yield, feel free to get in touch with me. But stay tuned for our second episode where we're going to talk about things you should consider before buying a rental property from a rental perspective and finance perspective. Thank you.